Boom, baby. Morad, Fiki, how's it going? How's everybody doing this fine Thursday? Today is Thursday, January 27th. Can you already believe that the month is coming to an end? We are about into February, and it's time to take it to the next level. You know, I want to talk about today about mindset and growth, having a growth and abundant mindset. There are so many opportunities out there. There's so much real estate. There are so many opportunities, so many deals, so many different ways of investing in real estate. So why are we still doing the day-to-day grind? You know, maybe living a life or having a lifestyle that you hate, or even working in a job that you hate. Life is too short to be dealing with nonsense. And I'm not saying that you're going to make changes immediately and get a result, but it's time to take actions and progress towards what you really want in life. Isn't it time to really take action on the burning desires of your heart? And that's what I really want to talk about today. I want to talk about taking action now. It's 2022, and it is just too late and too tired to just doing the same old, and just not living life with passion and investing. And I am passionate about investing because investing is building for the future. And I love making a great investment that just pays dividends and cash flow and just takes care of me and my family. And today we're going to talk about multi-family apartment investing and why this is actually my favorite investment. I own some stocks. I own some other investments. I like to invest in the stock market. I like to buy companies when they're underpriced. But stocks and other even fix and flips, they do not provide the massive advantages that multifamily apartment investing does. And we're going to go over that today. So let's go right into it and hope you're having a wonderful Thursday. All right, let's share the screen. Day 4 of explosive growth. We are going to dive right in. So explosive growth 5-day challenge. We'll go right into our disclaimer. I'm not a financial advisor. I'm not an attorney. I'm not a CPA, but I am a licensed real estate agent. I am a real estate investor, and I'm so passionate about investing. I will discuss my own personal results and experiences. Today, we're going to talk about multifamily apartment investing. I'm going to talk about my personal experiences. I cannot guarantee any results for you. There are so many fluid factors in real estate investing, and it's external and internal factors. So you've got to make your own investment decision on your own. It's a personal choice, and you do so at your own risk. Anyone who tells you that an investment is not risky and there's no risk involved in any kind of investment is lying, because every investment has risk. Even with real estate, there's ways to take calculated risk, but there's risks. Not every investment turns out to be a good one, and that's why you want to take calculated risks. So you may not get any positive results. As with any investment, you could lose some or all of your principal investment. Real estate investing is risky. Should you decide to invest, do so at your own risk. Now that we've covered that, let's go right into it. Today's word of the day is explosive. What is explosive? It is the ability to likely shatter or burst apart, likely to cause an eruption, relating to a sudden and dramatic increase in amount or extent. So I'm talking about explosive growth, because explosive growth to me is making that quantum leap. What I'm talking about is doubling your income year over year, tripling your income year over year. You shouldn't be looking to get a $1 per hour raise. We want to double and triple. That's what explosive is, making the quantum leap. And it is absolutely possible, especially when it comes to real estate investing and learning real estate. And we're going to discuss that today. And if you believe it, you can achieve it. Henry Ford said what? He said, the man who believes he can and the man who believes he cannot are both right. So which one are you? And I say the man or woman. So let's move on. Day 4. Today we're going to discuss multifamily apartment investing. So we're going to talk about multifamily apartment investing. When I'm looking at, and when I mean multifamily apartment investing, I want 60 units or more. Now, is a 10-unit apartment complex, apartment building, is that multifamily? Of course it is. Is a fourplex multifamily? Of course it is. But I'm specifically discussing 60 units minimum. Why is that? It's because when you have at least 60 units, the property will substantiate a on-site full-time property management. And why is that important? That's important because I don't want phone calls about fixing toilets or electrical issues or a roof leak. I don't want any of that. When you have on-site property management, the property manager is going to take care of that. And they have to be well paid so that they can handle all of that. And we can focus on investing. Investing is greatness. So I don't want to deal with those calls. That's why we want a minimum of 60 units where the property will cash flow enough to have that as an expense on the property. We're talking about monthly cash flow. So what I love about these is you want a property that's already cash flowing, meaning day one, it is cash flowing. This is a business that is providing us with cash flow that will not only take care of the property, that will pay for all of its expenses, that will pay for the on-site property management, that will also take care of any issues, legal issues, or anything that needs the property needs, and it will provide you cash flow. It will also service the debt. So the cash flow will also service the debt, and after all of that, provides you with cash flow for having an investment. I love that concept. There are massive, massive tax advantages. And what I'm talking about is depreciation. Depreciation, Warren Buffett said the eighth wonder of the world is compound interest. And I agree with him. So the ninth wonder of the world is depreciation. Depreciation is something that is in the U.S. tax code that allows investors to take an expense on our personal tax returns, an expense that is it's a fantasy expense. It's not really an expense. So you're allowed to depreciate the property while the property goes up in value. The property's appreciating, but I get to take a depreciation expense on my taxes. I can reduce the income that I have by depreciating our long-term multifamily investment properties. Now, why is that? Because it's in the tax code. Why would the government allow this? This must be some loophole, right? No, it's not a loophole. It is in the U.S. tax code. Your U.S. Congress voted for this. So it is not a loophole. It is written in the tax code. And why would the government want that? Because the government will incentivize you and me to do things that the government wants investors to do, to provide services like housing that the government doesn't want to do. So they will incentivize us to provide housing, and that's why it's in the tax code. So we can take advantage of depreciation. There is no other asset class that allows depreciation to be a write-off on my personal taxes for a fantasy expense. When I say a fantasy expense, I mean this. Depreciation is not, I'm not writing a check to anybody for this. So it's not like I am paying for something. However, on my taxes, it's written as an expense, but I never paid for it. It is simply something that the tax code says that year over year, we're going to depreciate this property and get you a write-off on your taxes because you are providing a service that Uncle Sam does not want to provide, and that is housing. That is a public service. So that is why it's in the tax code. There's also something called 100% bonus depreciation. And without getting into all the weeds, there's a limited time frame up to 2023 where certain parts of the property can depreciate 100% in year one. Now, there's a very intricate process to determine this, and you actually have to hire an independent firm, which is called, and they're going to audit, they're going to do a cost segregation analysis where they're going to break down all of the items that the property has. Certain items have to be depreciated over 27 and a half years, and certain items can be depreciated 100% in year one, like the fixtures. So again, this is a fantasy expense. It's not something that I'm paying for. I'm not writing a check to anybody on this, but I am allowed by the U.S. tax code to write this off on my taxes. And this can go against my W-2 income. This can go against my income if I am a designated real estate professional. What is a real estate professional? According to the IRS tax code, it is someone who spends at least 800 hours per year in real estate activities, which I can clearly claim that I'm a real estate professional because I probably spend 10,000 hours per year in real estate activities. I mean, I don't know how many hours there are in a year, but it's a lot more than 800 hours a year I spend. I know that for a fact. So again, you've got to discuss with your CPA. Are you a real estate professional? If you're a realtor and you do real estate full time, I would say you probably are a real estate professional, but that's something you discuss with your CPA, and how can you be designated a real estate professional in the future. But there are certain incentives in the tax code that allow for depreciation expenses to go against my personal income. I love that. And this is the only asset class where you are allowed this kind of write-off on your taxes. You don't get it in stocks. You don't get it in cryptocurrency, fixing and flipping, new construction. You do not get these tax benefits, especially with fixing and flipping. You got to look. We discussed fixing and flipping earlier. And with fixing and flipping, we're looking at, this is a short-term investment. So with a lot of flips, I'm looking to be in and out within 90 days. So because of that reason, I am not providing a public service for a long term, meaning at least 365 days of the year. So you have to hold on to this investment at least 1 year to claim depreciation. And so you don't get those benefits with other real estate investments even. So that's one reason I absolutely love this asset class. Going to talk about apartment syndications and real estate syndications. Again, I don't want to get very deep in the weeds because this is supposed to be a kind of a high level view. But a lot of these assets, a lot of these huge apartment complexes that you see, they're being purchased for 10, 20, 30, 40 million dollars. And how can we collectively purchase an apartment complex when we have to come up with 30% of the down payment? Generally, a bank will finance about 70%. So for the 30% down payment, I need to syndicate a group of investors. There's a lot of rules about syndication, so I'm not going to go into that much depth, but you must have a pre-existing relationship with someone. They must be what you call an accredited investor, and there are certain regulations that have to be filed with the SEC. so you can get a waiver from security filings and such. So again, this is someone who has to be sophisticated enough and have experience if they're going to syndicate a deal, and they are going to be someone who generally would hire a securities attorney who knows how to prepare the proper documentation. So this is a very intricate process. You wouldn't get involved in this without having extensive research doing this. But I just wanted to point out that there are apartment syndications where a group of investors can come up with a $3 million down payment to purchase these properties. And then the last thing I wanted to talk about on one of the disadvantages of apartment investing, it's a non-liquid investment. What do I mean by that? I mean, basically, these are long-term investments, generally 3 to 7 year time horizons. And we're looking for our investment to at least double within those 3 to 7 years, maybe more. However, this is not an investment that you would invest in today and then tomorrow I changed my mind, I need my money back. The investment is literally in the apartment building. You have to remember, the investment was put together by a syndicator, and we actually purchased these apartment complexes. So that cash investment is in the apartments, it's in the bricks, so it's not like a stock where I can hit the button on E-Trade and I can liquidate that investment if I want my cash back. So generally, the only times that these investments are liquidated is when the property is sold or refinanced. And that's generally the only time you're going to see any of your investment back. And so you have to know that if you're looking at these investments, you have to know that this is a long-term investment. I'm willing to part with this investment for a certain amount of time. And again, the syndicator would tell you what is the time horizon. But generally, what I've seen is 3 to 7 years. Could be longer. I've seen syndications that are 10-year time horizons. So you have to know you won't be getting your money back for that period of time until the property is sold or refinanced. And so those are the main points about non-liquid investments. Let's go ahead and jump into some questions. I know we covered a lot. I'm going to take a break right there and see some questions. We have somebody saying, wow, yes, that's exactly what I said when I found out about multifamily. I was like, whoa, that is awesome. You get cash flow. Great question. Absolutely. So different investment. Again, you have to look at the investment and discuss it in detail with the syndicator. The syndicator is going to be the person who's putting the investment together and presenting it to the investor community, presenting it to the investors. And they would normally have a memorandum, an offering memorandum, which is the same thing as when a company goes public. They would present an offering memorandum and say, this is the investment we're looking at. This is the purchase price. This is our capital raise is X. This is the time horizon. And this is the cash on cash return. That's the answer to the question. The cash on cash return is X. Generally, I'm looking for an 8 to 10% cash on cash return. Paid monthly. I like to be paid monthly. And so some syndicators will pay quarterly dividends and some will pay monthly. But this is just like a stock that would pay you a dividend every quarter. Some stocks, and a lot of them don't even do it anymore. But there are some stocks that still pay dividends to the investors every quarter, depending on how the company's doing. And so it's the same concept in that depending on how the apartment complex is doing and how the cash flow is, then we would distribute monthly cash flow payments to the investors. And I would look for an 8 to 10% monthly cash on cash return, meaning the amount of cash I invested, I would like to see an 8 to 10% cash on cash payment to me while my investment is growing in value over time. So let's take another question. How much would I have to invest? How can I find these deals? A great question. Again, the syndicator would tell, but generally, I'm talking about generally what I see on apartment syndications. There is a minimum investment of $50,000 to $100,000 minimum investment. I have seen some that have a lot less. They can be as low as $1,000 to $5,000, but those are the bigger companies. Those are the bigger companies. Like Cardone Capital and some of these other companies that they are willing to take lower investments. But what I've seen from them is it's only on specific deals. That would be up to the syndicator. But I'll also add that, you need to look into who the syndicator is. You don't just want to invest with anyone. You want to invest with someone who knows what they're doing, has extensive experience, and somebody who has a track record. Like they've done these deals. They've paid investors on time without delay. They have taken an investment to matriculation, to the very end, and then resold and doubled investors' money. That's what you want to look for. And when you're looking at these investors. We have another question. If I won't see a return for 5 to 7 years, how do I, as a new investor, ensure it's the right deal for me? Time is money. That's a great question. And that's how you look at all investments. You need to look at anything you invest with. Warren Buffett said, any company that I invest with, I need to be prepared to be married to that company. And that's just a great way to put it. So any investment you do, you don't want to be worried about your investment. Are they going to lose money? They're not paying on time. Now they're not paying because the investment is not doing well. You want an investment that you feel comfortable with, that is doing well, an investor and a syndicator who has a track record. Again, they've done these deals and they've taken them to matriculation. They have a great reputation. That's who I look for. But these are great investments. Let's see what else. So get right back into it. And and that's basically what I wanted to cover on multifamily apartment investing. It is my favorite real estate investment category. And another good thing about apartment investing, so these are 3 to 7 year time horizons. So you might say, wow, that's a long time. But I also say, well, that's an investment that's going to pay me for that entire time. And I don't have to worry about it. The syndicator is going to oversee the investment. So as a passive investor, I'm not dealing with phone calls. I'm not dealing with issues that the property may have. And every property is going to have certain issues over time. But you want great property management who's going to make sure the property is being maintained, who's going to make sure we have a great tenants who pay on time and who don't deteriorate the property, who don't have issues. You really want somebody who knows what they're doing. And, it's just an investment that I can make that's going to pay me over time and I don't have to worry about it, if you've made the right investment. So let's see if we have any other questions. Does that make sense? Was that helpful? I hope so. So great. Okay. And now I'm going to make you an offer for our real estate mentorship, explosive growth mentorship directly with me. You got me for the next 12 weeks. So we're going to have a 12-week explosive growth mentorship program. That's going to come with the workbooks and resources, the private community that we're building where we're going to help each other and lift each other up, unlimited access to the mentorship training archive, lifetime access to all replays and upgrades. You're going to get your own certificate, guest speaker workshops, real estate success stories, one-on-one strategy session with me where I'll help you develop your investment strategy. And on top of that, I'm going to add, you're going to get VIP access to our future events, our live events. Hopefully with COVID starting to die down and, as things get back to normal, we're going to start having live events. And I can't wait to see you live here in Houston. It's going to be great. So, everyone in the explosive growth community is going to get premier VIP access to our live events. So we're going to offer that today. This is a total value of $10,976. We're not even going to do it for $2,000. We're going to do it for $997, only $997, or we'll do it for $397 and 2 more payments of $397 monthly. So I really hope you take advantage of the offer. It's going to be fantastic. You get me for 12 weeks. Can you believe that? So with that, we're going to wrap for today. I don't know if we have any other questions. So, I appreciate having you here with me every day. This has been fantastic, just covering these different asset classes, and we're going to go deeper with explosive growth mentorship. So, like always, remember, greatness is within you, and it's time to dig deep for greatness. Isn't life short to just not be the best that you can? And I can't wait to see you in the next time. Have a fantastic day. We'll see you soon. We'll leave that. All right. So